Hey everyone, I'm Hope King, Axios' senior business reporter here with another conversation with Public's leading indicator. Today's guest is the co-founder and CEO of Affirm, Max Levchin. It's great to see you, Max.
Thank you for having me.
I also, of course, always have to mention that you were part of the original PayPal team because that cannot be emphasized enough. It's very important to your whole career and legacy because you love fintech.
I do. I've worked very hard to have that mentioned second, not first. So
I got you there.
Thank you.
But I do want to start with what your passion is. Where does that come from for a lifelong career pursuing different ways to get consumers to pay for stuff, to get stuff into their lives?
It's a combination of a few things. First and foremost, my original interest was in security. So my sort of true background is in things like computer security and cryptography, encryption. And PayPal was born out of a project that was more about securing data and securing payments than really helping people pay for things on eBay. Obviously, that's where it got its major boost in growth. But that sort of put me up to this idea that the same kind of reasoning that leads you to be mindful of both challenges and opportunities in security, you can apply to payments. And payments is literally the world's largest market. And so if you are good at something and it happens to be enormous, which means there are as many opportunities as there are problems to solve, kind of get addicted to solving them. So that's probably the less glamorous version. But the other side of it is I'm an immigrant, and coming to the US as a teenager with no credit history or understanding of how credit works had its fair share of bumps in the road, at least initially. So I had a messed up, for lack of a better term, credit rating because I borrowed a little bit more than I should have on credit cards in college and promptly fell behind in my payments and so on. And so I think I know what I'm doing in payments. I have experienced a fair share of personal problems 30 years ago, but remember them vividly. Affirm was very much born out of the, you know what, I think we can do better and I think I know how.
And there's still different ways, I think is also what I'm hearing to innovate in this space. Prior to our chat today, I was watching your most recent interviews, and I have two major observations, one of which you are literally always on brand. I mean, I don't know how many of those shirts you have. How many do you have? And it's in different, you've got polos, you've got t-shirts, you've got pullovers. I mean, who is the supplier of all your Affirm wardrobe?
Well, seeing how these are all, generally speaking, inexpensive Affirm swag, it is produced internally by our company, but shareholder value is preserved. These are not expensive outfits. I do not have a designer Affirm suit, although maybe one day. But I actually don't know how many I have. I do, however, have even exotic things like cycling Lycra with Affirm logos and hats and other things. And being on brand is a big part of my approach to business. The cool thing about being on brand, by the way, so I really am always wearing Affirm t-shirts. On occasion, you'll find me in a plain black t-shirt when I'm like really trying to stay incognito. But most of the time, I'll just wear Affirm gear. The cool thing about it is that nearly 100% of the time, if I'm somewhere where other people are present, somebody will come up to me and say, Affirm, so cool, love your product, great. And once in a while, somebody would ask me, what do you do at Affirm? And then I get to like, I run the company, and they're like, whoa, man. So I've yet to have an unhappy encounter like that, but sometimes it's a little weird where one time I was taking my mom out to dinner and the server insisted on talking to me and taking a photo with me. And my mom was like, that's weird.
Fascinating that you're a bit sheepish to admit that you are the CEO of this company.
I don't know if they're like, hire me, or, oh, if you're the
Right.
CEO. Maybe I'm traumatized by PayPal. PayPal, years after I left, I would get, oh, aren't you the PayPal guy? My account has been frozen. Can you help?
Right. Immediate customer service is not what you signed up for dinner with your mom.
That particular person was so excited to meet me. It was amazing. Actually, it was like, I had to explain to my mom what was going on because like, why is this lady so excited to meet you? Like, because we do good work.
Like you're making an impact. I promise there's a reason why I'm asking you about all this, which is that in these interviews too, you seem to be very focused, as you should be. And, there's very few times where I've seen you laugh. And I'm just wondering what's weighing on your mind right now. What are the top 3 concerns that you have for the business maybe and for the economy?
That's a great question. I'm generally one of these serious people. I think it takes a certain degree of seriousness to run a financial service company. But there's a fun side to me somewhere. 3 things that are weighing on my mind. I think the U.S. economy has been unbelievably resilient in the face of what I would only describe as a roller coaster of financial events. You have kind of global instability as kind of the backdrop to everything. You have a rapid rise in inflation as a consequence of the COVID stimulus. You have this sort of a dramatic brake lever pull by the Fed. And yet throughout, generally speaking, people are buying and spending and paying their bills on time and behaving as if like not that much is wrong. And I think that's a compliment to our economy, possibly a compliment to the Fed's foresight. I worry sometimes, the Goldilocks soft landing, whatever they're calling it today, like, is it real? And does this have do we just get through this period of instability to a happy, prosperous, low inflation future, or are there more bumps? And I have no crystal ball. I don't know. Right now, things are better than anybody predicted them to be, and consumers continue to pay their bills and our bills to them on time and so forth. But that's always in the mind of every risk manager and probably even every CEO outside of fintech or financial services. Hey, this is pretty good. What do I not know? And I look at a lot of macroeconomic indicators to make sure that I know what's coming next. And then I'm not sure I can come up with 3, but like anyone who's running a now larger company who has been here from day 0, I've seen the movie before, including at PayPal and other companies where I've been involved. Eventually, you get big enough where innovation is a thing you don't normally do. You have to muster the strength and the team and the courage to go break away from your own business model or create disruptive change to yourself, because otherwise somebody else will. And a huge part of my job at all times is figuring out what that next S curve of growth looks like and how do we actually action that? How do we make it happen? And I worry little about both those things. I just spend a lot of time trying to make sure I know how to solve the problems.
So what happens to a company like Affirm if your worry about a Goldilocks scenario doesn't come true?
So we'll be fine. And reason for it is we have a uniquely great model when it comes to lending. The standard sort of a worry about lenders is they are guaranteed to get in trouble whenever there's a macroeconomic turbulence. All through calendar 23, I think there were plenty of people worried that we're just going to, any minute now, have real bad time with credit. And we consistently posted good, great quarterly result after quarterly result. And it's not that it was by accident. We just sort of watched the dials float. Our transactions are underwritten every single time individually. So every time someone comes along and says, I'm going to buy something using Affirm, we get a chance to say, is this a good financial idea for you or not? And because we don't charge late fees and don't compound interest, we're very financially motivated for you not to be lying to yourself about your ability to repay the loan that you're making with us. So that alone gives us just a very, very fine degree of granular control over the actual returns on these transactions. And then the average lifetime of these loans is quite short. So it's somewhere between 4 and 5 months at any given time, which means that as we see fluctuations in consumer behavior, we get a chance to adjust our underwriting policies and make sure that we steer our overall portfolio to good outcomes. And we've had this battle tested reasonably well over the last few years, and I certainly don't expect the tests to stop. So we're diligent as ever, but we feel very good about our ability to control the outcomes here.
So in this segment of our conversation right now, which is really just talking about the macro backdrop, I want to drill down a little bit deeper. A few members of my team at Axios met with your president a few months ago, and in that conversation, they emphasized exactly what you said, that there are these knobs that you guys can turn, most likely because you have insight into the merchants and the product side as well. So just to give people a sense of sort of the basics, right, of how Affirm works, I mean, you're not only helping consumers with the purchases they need, you're helping retailers generate demand at times when potentially they're seeing some lackluster demand, whether it's, competition from one another or inflation worries. Go into some more detail around some of those other knobs. So on the merchant side, what can you do when you might see some of that demand turn down from consumers? And on the consumer side, how are you really helping them maybe manage their bundles of debt that they have in these small packaged time frames?
It's a great question. So on the merchant side, one of the really key insights that we had going back 12 years ago at this point, most merchants really dislike discounting. The idea that I'm going to tell you to come and buy something from me because it's 20% off, the message you're getting is the real price is not the price on the sticker. It's 80% of the real price. You're willing to take me in by convincing me to shop with a 20% off the top. I'll wait for the next 20% off sale, or maybe 30% will come next. And so this gigantic cut of the total price for the merchant is something that they do when things are really tough, when they really need to drum up demand, when they really need to compel people to come and buy at their brand. And so one of the things that we've done is we said, you know what, forget discounting. Most consumers, in fact, half the country is paying interest on their credit cards right now. People don't really understand how the compounding interest works, but they know intuitively at a very good level that they're paying a lot of interest for the purchases they made. How about compelling them to shop at your brand by saying, if you buy this thing, the price is the price, but we will take care of your interest. The retailer themselves will just say, you know what, if you buy this for $100 that it's cost, or $100 over 6 months, the price is still $100. No interest, just pay more. Buy now, pay over time. And that really resonates, not just with consumers who frequently do need the time to pay a little bit extra time. It really, really helps merchants move the merchandise, really helps them create more sales without compromising the price. And they still have the Christmas sale and a back to school sale. But a lot of times mid-year, when they're not trying to speak to a particular date, they can just say, look, we can convert these consumers at the point of sale better simply by giving them an interest-free or a reduced interest deal relative to the credit card comparison. And so that is a value add to both sides, where the consumer really is getting an incredible value. They're getting time value of money for free, and the merchants can compel you to transact without having to reduce price. Incidentally, the cost to subsidize interest is usually a lot less than these 20, 30, 40% sales. And so it's actually easier and cheaper for the merchant to agree to do this. And that's kind of the foundational notion of buy now, pay later industry. It's particularly strong with us because we started and at this point are dominant in what's called considered purchases, where the items we're talking about, $100, $200, $300, you really are going to pay a lot of interest if you put it on your credit card and just kind of pay it as you can, versus with Affirm, where a lot of times you're paying no interest at all. But even if you are, it's over a fixed period of time. It doesn't compound. There are no late fees.
Yeah, but those credit card points, Max, I mean, come on. You can do so much with them, and the points to go travel and the rewards. I want to come back to this from another angle too, because if you're looking at, the growth of your business, as of the end of December, you had about 17 million active consumers, average order value 287. These are facts that you guys have put up on your own website. How much is it, though, part of the key to your success to help more merchants get onto the platform? I mean, with Walmart and Amazon, recently announced, that has to move huge volumes for you guys. How do you decide which merchants you want to go after? How do you decide which products really make sense?
So the cool thing about building networks is that initially it's really, really, really hard to get off the ground, but it flips as you get to a certain degree of scale where you have real consumers and real numbers of consumers and real merchant brands on the platform, and then the next wave comes along and says, hey, we want to be a part of this too. And so the first few years of Affirm, I would literally call up friends, CEOs in e-commerce and be like, hey, I'm doing this new company. It's going to help people shop. It's going to be interest-free transactions a lot of times, no late fees, great for consumers. You really want to give us a shot? And like, I have Visa and MasterCard. It's okay. Like, no thanks. Fast forward to, as you said, almost 20 million users, calling a CEO and saying, hey, we have 20 million users that have transacted with Affirm in the last 12 months alone. You really want to make sure our logo is on your checkout, because a lot of these people just want to use Affirm when they're buying a couch, a bicycle, a dress. And so it's become easier and easier to compel merchants to give us a chance. And on the flip side, as you see our logo in places like Walmart.com and Amazon.com and every imaginable Shopify brand, consumers say, okay, so they're clearly legit. Like, they're on all the sites that I go to. Maybe I'll give it a try. The more they give it a try, the more merchants say, I feel like we're missing out. These people are using Affirm.
Yeah. So the network effect, you're getting to it. And again, I think from a competitive perspective, competition perspective, if you're a shopper and you're looking at the same product and they're on two websites, but maybe one offers Affirm and the other doesn't, that might compel the consumer to go shop at that one where they do need a little bit more help. So of this nearly 20 million, I mean, this, this question is coming, right? Like, true or false, the use of buy now, pay later is an indicator and a leading one for a weakening economy. Is that true or false?
False.
And why is that?
Well, for one, there are three ways to pay for things, very broadly speaking. Cash or cash equivalent, and obviously online, that just means debit cards, credit card, or something like Affirm. And we are the largest and the dominant one, but there's a handful of others that do similar things. In the case of the last two categories, so if you're paying cash now, great, you're well-to-do enough to just not think about it. If you're using your credit card, you're borrowing money. If you're using Affirm, you're borrowing money. It is healthier financially to use Affirm. It's very easy to prove. You're not paying interest on interest. There will never be a late fee. Many other fees that credit cards like to throw in, we don't charge. We charge no fees whatsoever. And so it's a better choice. The question is, are you adding Affirm to your credit card spending, or are you replacing credit card spending with Affirm? We are very hard at work to make sure that you're not stacking, which is the technical term or the industry slang really for people adding loans on top of loans on top of loans. And if we were bad at it, you would see it in our losses, except our losses are actually better than the credit card industry. And so if people are shifting spend from credit cards to Affirm, I'm a little bit biased in favor here, but it's also good for consumers. They're not paying extraneous fees. They're not paying incremental interest.
But am I also reading between the lines to say that if they are doing that, they are in fact in a stronger position because they know they can afford to pay it off in these increments?
That's right.
So then what segment of the economy would you say the buy now, pay later consumer represents?
So you said it yourself a little bit earlier. A great litmus test is just how obsessed are you with those miles? If you think that the miles or the points are the thing you live for and you got to get the, fill in your favorite airline, Affirm has some work to do to compel you, because we don't have miles, we don't have points. We just pass it all right through to the consumer. Don't pay fees, don't pay interest, et cetera, et cetera. And so we try to be a no frills, good for you financial service provider. If you're thinking you're winning something by getting those points, getting those miles, we were probably not. You'll be the last one to come over to Affirm. However, if you're like most of the country where points are nice, but you'd rather not pay extra interest, or you're already revolving and you're trying to minimize that amount of interest you're going to pay, Affirm is a really compelling alternative. And so for that consumer, we are a very viable option. And that's why I get photographed with random members of the public. They say, oh, well, Affirm is awesome.
Well, just on the point too of the consumer who might be able to make that trade off in their heads and say this is better for me. You mentioned just now that you're doing more work to make sure that they're not stacking. What does that mean? What does that work look like?
Most importantly, the information about folks borrowing is reported to the credit bureaus, and we do reporting on our monthly installment loans, which represent about 85-ish% of our business. So most of our volume is reportable. There is no standard for reporting pay in full loans until very recently. Apple pioneered that with Apple Pay Later. They collaborated with Experian. We had announced already that we intend to join them in that, and we think that's a very good thing. But the point is, you want to contribute folks both performance as borrowers as well as their overall indebtedness, which just goes, in this, it helps you figure out how to make sure people don't go into more debt than they can handle. And I think the industry is overall trending in a direction. There's some holdouts. There are definitely some competitors of ours that have said publicly, well, we don't really want to report our buy now, pay later loans to the bureaus. I think it's a terrible mistake. I think that behavior is really creating the possibility of stacking, which just should not happen. People should be able to build their credit history, and they should not be tempted into borrowing more than they can afford. The other thing you can do, and we do that today, for folks who are what I would classify as on the cusp, where we can't quite tell if they are overextending themselves or they're not, we will go as far as to say, hey, share your bank account information with us so we can look at your cash flow. We'll make our underwriting decision based on actual ins and outs of your transactions in your checking account, because it gives us a really precise view into what you can and cannot afford, or at least allows us to estimate it. And I think the other long-term trend in fintech, which until maybe even 5 years ago was just not possible because technically these were too difficult and too onerous on consumers, you'll see more and more cash flow underwriting, especially for folks in kind of a lower economic strata, lower credit quality. It will help them get access to credit, which I think is a really good thing.
Well, is it true that the type of consumer that typically uses Affirm have a subprime credit score? Is that true?
No. We definitely serve folks that fit into the subprime bracket among many, many others. The majority of our users are concentrated in what's called prime and near prime, which are typically, prime is obviously exactly what it sounds, near prime, people who are kind of sandwiched between subprime and prime, and most of them are hopefully on the way up towards more earning capacity, more ability to repay. The subprime customer that we serve, and there's also the even more sort of dark sounding deep subprime, which are folks that are really below that category. In both of those cases, majority of that group are people who are misunderstood or mispriced by the traditional credit scoring system. They have had some sort of a bump in the road, typically years ago actually, and their credit scores still reflect that bump. To make a very compelling example, Max, yours truly, in college, opens a credit card, promptly misses a bunch of payments, has a FICO score that hangs out in the 500s. For uninitiated, 580, I think was the bottom, or 570 or something like that. That's deep subprime. That's like, no one should lend you money, don't really deserve a credit card. In fact, stay away from this person. That score was still thereabouts on the day of PayPal's IPO. The reality and the score were quite different from each other. And there is plenty of people in the US, the estimates range from 11 million to 30 million, whose credit scores are dramatically off from their actual financial reality. And that's a huge opportunity. These people are desperate for access to credit. They know they deserve it. There's no easy traditional way for them to get there. Getting their cash flow information is actually very, very powerful because they can readily demonstrate that they're fine. They have a job. They're paying their bills on time, but their credit score is taking a long time to update. And so when we do serve deep subprime, very frequently it's the people that are in that category. Subprime are obviously a larger, and some of it is not even mispriced. But again, we are definitely not predominantly focused on that group. Ultimately, if they are correctly identified as subprime, they can't really afford to borrow very much because their personal cash flow doesn't allow it. And because we don't charge late fees, because we don't compound interest, we have no ways of making money on them, unlike the greater financial industry. And so the best we can do is try to teach them, hey, you're overextending yourself. Please don't. Let us offer you help when we can.
Well, and your algorithm would see that and deny them at the time of purchase. I think the other reality too is it does seem like you're moving closer to the credit card industry, whether it's the way that the Consumer Financial Protection Bureau is looking at you guys and classifying it, and then if you're giving your data over to the bureaus too in terms of the credit scores and how they're calculated. I mean, is that a fair assessment that you're moving more toward the same industry that you've had said previously that you're waging a holy war against?
We're trying to revolutionize it. Probably a better. I'm sure I said something like a holy war because that sounds like.
But, you literally said holy war. So
I tend to get emotional about my goals.
That's okay.
But I stand by my words. I think credit cards are power tools with safety off. You're given this thing. It's pretty amazing. It's the best user interface to pay for things ever invented. You tap and go and you think about it later. And that's wonderful. But unlike Affirm, it's buy now, pay forever, where you're never really told, hey, here's a schedule, please get out of debt. So we are waging something of an attempt to replace them with a better product. And I am biased, but I happen to believe that Affirm and our competitors are a much better way to pay for things than credit cards. I think consumer protections and some of the rules that are embedded in things like truth in lending and many other acts that exist to protect consumers that have been passed by Congress are really powerful and certainly apply to us or should apply to us well beyond the form factor or whether it's a credit card or not. And so I bristle at the comparison with credit card because credit cards means revolving credit account. And that is exactly what I wage the holy war against. Affirm card is not a revolving credit account, but it's a card that knows how to do both credit and debit. And it's great that consumer protections extend to cover this market because I think it'll tell us that we're doing the right thing because a lot of what we do today fits into those regulatory frameworks already, and the rest of the market that they need to do as good a job as we do protecting consumers.
But there is an irony here, right, that you came in to disrupt this industry and now you're being classified, at least in this interpretive rule for returns at the moment, as the same. And you have also said that your preferred ultimate form factor of BNPL at the point of purchase is an actual physical card, at which point you would be in my wallet next to my Visa, my MasterCard, right? So, I mean, you're becoming just like everybody that you said you didn't want to become, that you wanted to disrupt.
Well, I think we are the anti-credit card.
Sure, but it's the card that you want, right?
So the user interface of the Affirm card is amazing. I think it's, as I said it before and I'll say it again, the credit card or the mag stripe or the chip or the, any part of the credit card you want to imagine is the best user interface for buying things ever invented. It has a million very, very, very clever little things about it that just makes it wonderful. It's the underlying financial construct that harms consumers. Like there's no two ways about it. If you are revolving on a giant balance, every swipe you make on a credit card, you buy a cup of coffee, you're going to pay interest on it. Like that's the thing that most consumers don't seem to understand. If you have a balance, you have no grace period. You have no extra days to figure out what you're going to do. You are going to pay interest on the cup of coffee the second you make that swipe. Affirm card is the first card that allows you to disconnect it to don't pay interest on things you don't need to pay interest on. But beyond that, the user interface is amazing. The financial product deserves to be reinvented, and that's what we did. So
you have 1 million now, more than active card holders. How much is this accelerating the adoption? Have you seen a link between somebody who has it and then, more of their purchases even digitally? Yeah,
absolutely. I think we reported that something like 30+% of the transactions on the Affirm card are offline, which is, effectively Affirm existed online only before the card came along. And so we have now expanded with the card to a ton of offline transactions. The average transaction per user frequency for overall Affirm is four and a little bit transactions per year. If you have the card and you use it, it's north of 10. So obviously it's, at least 2 to 3 times more. It's still super early, so I expect these numbers to go up. We're seeing in the new cohorts of card signups, the overall number of dollars people spend with us is increasing, not decreasing, which is a great sign. Typically, your early adopters are the most prolific, and then as you get more commonly distributed, you end up in just less frequent. But that's not the case. People are using us and more, and we want to mean something for every transaction for our customers. And so we have quite a lot of road to go before we feel like the product is great, but it is pretty great already.
In the last 2 minutes or so of our conversation, just forward looking, when you look at the road to profitability, I mean, you've already mentioned so many things that you guys want to work on. Those investments have to go into the business. Where does it come out on the other end?
I think as a publicly traded company, we have the responsibility to our shareholders, of which we are ourselves many, to balance between investing and post profitability. So we announced about a year ago that we were for the first time adjusted operating income positive and have since held to that and have no intention of changing it. Obviously, there's a little bit more to go before we are GAAP profitable, and at some point we will, I'm quite sure, announce that too. And so not a forward-looking statement, but the goal is to be a profitable institution, to create value for our customers by investing in products and building the most amazing things ever, and our shareholders by continually demonstrating that it's a self-sustaining, profitable enterprise.
So ultimately, when an investor is looking at the stock and thinking about the long-term plans that you have, what are they ultimately buying? Are they buying a responsible consumer behavior? Are they buying the merchant universe? What is it that ultimately they're taking that bet on and saying, this is where I should park my money?
I think they're looking at a new way to pay that is profoundly better for consumers that choose to pay with Affirm and merchants who are compelling those consumers to shop in their physical or virtual store. In the long term, we think that adds up to a high percentage of that person's disposable income and the kind of brand loyalty that a company that does not charge late fees, does not screw their customers, can inspire. And I think that's a shorthand of this is, imagine if American Express rebuilt itself using modern technology without the tech debt and 100 years of amazing, but now quite dated innovation. That's what we aspire to be. When I started the company, I mocked up this image of Visa, MasterCard, American Express, Affirm on a door, those stickers that show which credit brands are accepted in a store. That's what I wanted to see, an Affirm logo right next to Visa, MasterCard, and Amex. And that's what we're trying to build. I think it will take a long time. I don't think I think you hold your breath for and just one more quarter and we're as big and important. But we've gotten to the kind of scale where it's clear that tens of millions of people trust us with their considered purchases, and something like 60+% of US e-commerce is now supporting Affirm logo in their quote unquote door. We'll continue growing it, and over time, it's I think a pretty compelling investment opportunity. I certainly have been doing it for 10 plus years and have never sold a single share.
Well, I mean, I know people hear that and they say, wow, that is more temptation for the consumer to do all kinds of bad things with their money if they're not keeping track. Are you planning on announcing more features that will help people stay on top of all of their stacked debt in whatever form that looks like?
Learned the hard way to never pre-announce features, even on the best of podcasts. But we certainly have a tremendous vested interest in consumers behaving in the most sensible financial way for each of them. Right? If you don't charge late fees, if you don't extend interest past a dollar amount that you pre-announce to them, we never benefit from someone behaving badly or choosing to overspend or suddenly realizing that they can't afford. So our goal has always been to be on the same side as the best financial behavior for each of our consumers. We're definitely very motivated to build products that help folks stay on top of their purchases, not just with us, but with every obligation they have. And so in that sense, you're reasoning the right way about what might be in the future, but give us a little time to get it fully ready, and then we'll announce it all.
You're a lot more optimistic about consumers than I am. I mean, look at my own behavior, and I do not trust myself. So that is what you do, though, as CEOs. Last question about the politics of this year. I've spoken to a lot of analysts who say that consumers are going to be distracted this year come the election. Is there an outcome in which you think, depending on what happens in November, that will shift the economy or shift consumer spending one way or the other? What would be better for business, do you think?
I can honestly say I had not considered the business implications of our potential leadership.
All right. Well, we'll have to say
on this one. I'm very pro peaceful transfer of power. I would not like to see another version of what happened on January 6th. Other than that, I am excited to cast my vote and find out what happens the morning after.
All right. That sounds good. If I were to open your wallet right now, which credit cards would I find?
Well, Affirm card, obviously. I'm a big admirer of Amex, so I have my my Amex here as well, and my somewhat boring corporate card. But these are the two tops.
Oh wow! Thanks for showing us. What do you like about the Amex card?
Can you blur out the numbers actually?
Yeah, I'm sure we can do something where we cut that out.
Actually,
but what do you like about Amex?
You don't have to do anything. Neither Affirm nor Amex have the number on the front. They're both in the back of the card. There's nothing.
There you go. But is there something that you like about Amex specifically?
I'm a huge admirer of what they've built. They are a closed loop network, and vast majority of closed loop networks have failed to take root because it's really hard to distribute. Visa is an amazing story of networks where each bank distributed Visa to their constituents, their merchants, their consumers, whatever service they provided in their community. Amex did the hard work of going literally door to door to door and consumer to consumer to consumer and getting signed up for the American Express brand. And that's what we did. I mean, we cut deals with Shopify and Amazon and Walmart and merchant after merchant. And so we are a hybrid loop network in a sense that Affirm works. So Affirm card is the Affirm card, but on the back, I'll hide it quickly because my number is there. But the Visa logo in the back is there too. And that means that wherever Visa is accepted, you can use your Affirm card. But wherever Affirm is integrated directly, that'll work just fine with or without a Visa number. And so Amex did, in many ways, what we're trying to do, the hard, slow way of offline distribution. But I think that just makes them that much more impressive. It's also one of the very few financial services brands that really means something. I think Visa is a blanket brand that's, Olympics and access and everywhere and all the things that Visa stands for. Amex has a very directional relationship with its customer. It'll take care of you. It will help you in ways that you don't expect. It'll deal with your disputes, no questions asked, et cetera. And so we aspire to be as loved as Amex is by their consumers, but to be more democratic. I think Amex, I'm glad my credit score recovered enough where I can now be approved for Amex, but it wasn't true 10 years ago.
Wow. I would hope so. I would hope so at this point. Well, Max, it's been such a pleasure. My goal was to talk to you about things that you haven't been asked in the last 2 weeks or so. I hope you enjoyed it as much as I did. And just best of luck, and we'll see you next time.
Thank you.
Thanks so much,
everyone.
everyone.
Asking questions I did not anticipate.
Well, that's good. I want to make sure that your time is used valuably. And so I really enjoyed it. Max Levchin, everybody, the CEO and co-founder of Affirm. Thanks.